I think once we reach above 35, that will become a new floor. And I actually think that by the end of this year, sometime in the second half, we can probably at some point touch the $40 level. So, with gold going ballistic the way it is, and I just saw a quick headline this morning from the World Gold Council that 2024 saw another 1,000, I believe it's 1,000 tons of gold being bought by central banks. That's 3 years in a row, extremely bullish. And if you look at the numbers, I don't know if I've pointed this out before with you, but when I saw that for 2023 and 2022, that gold buying by central banks was above 1,000 tons, I did the quick math and I saw that that's really about a quarter of every ounce of gold was bought by a central bank in the last now 3 years, which is very impressive. So think about that. 25% of all the gold, physical gold, is being bought by central banks.
If silver surpasses $35, it could establish a new price floor, and by the second half of the year, it might touch $40. Meanwhile, gold continues to surge, with central banks purchasing around 1,000 tons in 2024, marking the third consecutive year of heavy buying. Over the past 3 years, central banks have acquired about 25% of all physical gold, highlighting strong demand and a highly bullish outlook. PeterKrauth exposes that over the past 20 years, global central banks have been reducing their US dollar reserves, dropping from around 62 to 65% to about 54%, while aggressively accumulating physical gold. This steady trend suggests a shift away from reliance on the dollar. Meanwhile, stock markets may have peaked, with signs that the S&P has rolled over. Much of the recent market hype was driven by tech stocks. Still, the emergence of cost-effective AI from China could threaten the dominance of the Magnificent Seven, potentially triggering a broader market downturn. PeterKrauth, a respected resource market analyst and expert in precious metals, particularly silver, explains that silver ETF investment has surged, with 2024 projections doubling from 50 million to 100 million ounces. When factoring in these ETF inflows, the silver market is expected to face a near-record deficit of 282 million ounces, just shy of 2020's 300 million ounce shortfall. This strong demand for physical silver has been evident in the rising holdings of the SLV ETF since July, highlighting a renewed appetite for silver investment. Before diving into Andy's video clips, subscribe and hit the notification bell so you don't miss out on more content like this. Thanks for watching, and enjoy the video.
They are not comfortable holding. I was just looking at some stats the other day. The percentage of holdings of reserves by central banks globally has been falling for the last 20 years or so. And we've gone from, I believe it was around 62, 65% to about 54% now. And the trend is clearly downwards. So central banks around the world are doing two things. They're doing a lot of things, but two main things maybe for us to consider and keep in mind that are, have huge implications given what we're talking about, is that they are buying gold, physical gold, hand over fist. They are selling US dollars at a very, very steady pace. So, how much more, how much more indication do you need? Again, with some reservations, I'm going to call this the smart money. Keep that in mind when you think about where you think things may be headed. And I also think that there's a good chance that the broader stock markets have rolled over. There are a few indicators of that. I think the S&P peaked from what I saw just earlier today. I looked at when its last high was. This was 3 days after Trump's inauguration. I think that there was a lot of, I'm going to say, hype, and maybe also a lot of FOMO and all of that sort of stuff built in. Now, a lot of that had to do with the tech stocks. We've seen this, potential real threat coming from DeepSeek AI out of China that was apparently a lot cheaper to develop. If the air comes out of the Magnificent Seven, that is almost certainly going to have big repercussions across. What's interesting, though, is that they show as a separate line their net investment in silver ETFs. And the original forecast was that the flow into silver ETFs was going to be only about 50 million ounces for 2024. When they revised their numbers in November, that actually doubled to 100 million ounces. So they're seeing a lot of silver is actually now flowing into the silver ETFs. And so if you include the net investment into silver ETFs and look at the kind of market surplus or deficit that they were forecasting in November for all of 2024, it was going to be just below the all-time record deficit of 2020, which had a 300 million ounce deficit. Their forecast in November is that 2024 would show a 282 million ounce deficit when you include flows into silver ETFs. So, these are the kinds of things that I think gets missed by the market and really is indicative of the appetite for physical silver and how and where it's flowing. So, and I look at the chart for the SLV ETF, the world's largest silver ETF. There are all sorts of arguments about whether the silver's there or not. If we ignore that for a moment.
PeterKrauth highlights that the silver market has faced 4 consecutive years of deficits, totaling around 80% of 1 year's supply. This prolonged shortfall has significantly drained inventories, leading to concerns about future availability. While some argue that additional silver reserves exist and will eventually enter the market, the key question is at what price? Much of this untapped supply is held by individuals who may not be willing to sell at current levels. As silver inventories reach critical lows, any remaining private holdings will only be released gradually and at much higher prices. Investors, particularly long-term stackers, are unlikely to sell unless silver undergoes significant price appreciation. This slow trickle of available silver could drive prices higher over time, eventually leading to true price discovery that reflects silver's actual market value. PeterKrauth explains Shanghai silver prices currently carry a premium of nearly 10% over COMEX prices, suggesting a more accurate reflection of silver's actual market value. At a $3 premium, silver would be trading around $35 instead of $32, which may be a more realistic clearing price for transactions. This highlights the disparity between Western and Eastern silver markets, with China potentially setting a fairer price benchmark. PeterKrauth points out that the Silver Institute initially projected a 25 million ounce silver deficit for 2024, but later revised it to 180 million ounces. This adjustment was based on slightly increased supply and lower than expected demand for silver jewelry and silverware. Despite the revision, the ongoing deficits remain significant, continuing a multi-year trend of silver shortages that could impact future pricing. Now, let's jump into the interview.
We're exaggerating, overblowing the situation. There's all of this silver that we can tap into to meet demand. So by the way, we're going to have been now 4 years in a row of silver deficits to the tune of, if you add these 4 years together, we're talking about 80% of 1 year's supply in just the last 4 years. So that explains why these inventories have been drained. But what I was saying earlier about tapping into these other inventories that we can't identify, that we know are there from individuals or whatever, that silver will come to market. And I'm willing to agree that yes, that silver will come to market. However, my point or my question becomes, at what price? Yep. And that relates to what you said earlier. What will be reasonable? Some will need to liquidate. That's one thing. But is that the vast majority? I guess it depends on what's going on, globally, economically, etc. But I'm willing to bet a lot of that is stackers that have no intention of selling and really, really need to see a much, much higher price before they will let go. So I think when these identifiable inventories are at critical low levels and supply needs to tap into these unidentifiable or sort of private hoards, I think that will come out in dribs and drabs, and that is what's going to drag the silver price a lot higher. It's going to be, like you said, price discovery for what is a truly fair price for silver, and that's much higher than where we are today. The price in China, because you have to own that bar. Well, if you look at Shanghai prices versus the COMEX, the premiums are actually just under 10%. So this is much closer to a real price, I believe. And so if you say 10%, let's say on current prices, so that's $3 more, we're at 35. We're at 35. That's a much, much more realistic price, I think, than 32 right now. Much fairer, and a place where where I think realistically the market, the silver price can and should be clearing transactions. I want to point out something that I came across when I was looking back at some of the numbers that were put out by the Silver Institute. And so they originally had forecast that there would be a silver deficit for 2024. So they put out their survey in April of every year, and then they revise it. They kind of give an update in November of that same year. So for 2024, they had said that there would be a deficit of about 215 million ounces.
The persistent deficits in the silver market and increasing demand from investors and central banks suggest a strong bullish outlook for both silver and gold. As liquidity tightens and stock markets show signs of topping out, precious metals could become an even more attractive hedge against economic uncertainty. With silver potentially establishing a new price floor above $35 and central banks continuing their aggressive gold purchases, the stage is set for further price appreciation in the months ahead. How might continued central bank gold purchases impact the global financial system in the long run? Could a sustained silver supply deficit lead to structural changes in how silver is priced globally? Share your suggestions in the comments below. If you enjoyed this video, don't forget to hit the like button, subscribe to the channel, and turn on notifications so you never miss an update. See you next time.